In the first episode, I shared who I am. In the second episode, I explained how I think about mortgages. This episode is the pivot. This is how I choose because most people shop for mortgages the same way they shop rates. And that's like buying golf clubs based on price alone. No one serious about golf would do that. So why would you do that with the biggest financial decision of your life? There is no best mortgage. There's only the best fit for your situation. When someone goes to a club fitter, they don't start with brand or price. They start with questions. What's your swing speed? What's your skill level? How do you want the ball to fly? And what are you actually trying to accomplish with your game? That's how a fitting works. And mortgages should work the same way. In mortgages, we're not looking at the swing speed, we're looking at the income. Not what you think you make, but what's actually usable, consistent, and repeatable. A lot of people calculate income assuming everything is perfect, but real life isn't perfect. Hours fluctuate, bonuses aren't guaranteed, commission isn't consistent. So just like a radar doesn't lie in golf fittings, the numbers don't lie here. In golf, skill level matters. If you're a beginner, you're not gaming player irons. And in mortgages, credit works the same way. If you're early in life, you may not have bad credit, you just don't have enough credit yet. That doesn't mean you can't buy a home. It just means you may not get the best terms yet. Just like in golf, you just started playing. Augusta National isn't calling, but that doesn't mean you don't belong on the golf course. In a fitting, ball flight matters. Do you want it high, low, something that runs out, or stops fast? In mortgages, that's your down payment and equity strategy. Do you want to put 3% down and preserve cash, 10%, 15%, or 20%? And the question isn't just can you put that much down? It's if you do you still have enough saved if life happens? Sometimes the payment difference between 10% and 15% isn't life changing, but the cash you keep, it might be. That's part of the fit. And then there are goals. In golf, maybe your goal is a 300-yard drive. Cool. In mortgages, your goals might be I want a lower payment. I want to be debt free fast. I only plan on being here for 5 years. All of those lead to different fits, and none of them are wrong if they're honest. So here's how I eliminate options before we ever talk about rates. That keeps the golf analogy, but makes it decision first, not product first. Here's the part most people never see. A good club fitter doesn't hand you every club and ask, which one do you like? They quietly eliminate options that don't fit your swing. I do the same with mortgages. Before we talk rates, I'm already crossing things off the list. Here's some examples. If one income can't carry the payment, I'm taking the 15-year off the table. If you're not staying in the house for past 5 years, I'm not over optimizing for long-term payoff. If payment volatility stresses you out, adjustable options are gone. If cash reserve matters more than equity, we don't overcommit to a down payment. By the time we talk about the loan you're getting, half the options are already gone. That's the fitting part. Here's where people go wrong. They ask friends, family, people who already own homes. I once talked to a buyer who told me his brother-in-law said he should wait. So I asked him a simple question. Does your brother-in-law already own a home? He did, multiples. And that's when it clicked. Advice changes depending on where someone is in life. An investor sees the world differently than a first-time home buyer. A homeowner from 1993 sees the world differently than someone buying today. That doesn't make the advice evil. It makes it misaligned. Most bad mortgage decisions aren't math mistakes, they're identity mistakes. My job isn't to sell you a loan, it's to fit you in the right one. So I ask questions. How long do you realistically see yourself here? Can one income cover the payment? What number lets you sleep at night? What would you regret not doing later? If you don't know the questions being asked, you're not being fit, you're being sold. There is no best mortgage. There's only the one that best fits you for your swing, your timeline, and your risk tolerance. In the next episode, we'll talk about how I think about refinancing or what to do as a first time homebuyer before you ever need it. Thanks for watching.